And in our top business story, the ratings agency Standard & Poor's on Monday night affirmed Abu Dhabi's credit rating, which signals a vote of confidence in the emirate despite the recent fall in oil prices. The New York-based rating agency said that it considers Abu Dhabi's fiscal and external buffers to be sufficiently strong for the emirate to withstand the lower oil price trajectory at the current rating level. At the same time as it affirmed Abu Dhabi's rating, S&P lowered its outlook for Saudi Arabia and reduced its rating for Bahrain, while it held the ratings and outlook for Qatar stable. The agency's current rating on Saudi Arabia is AA1+, which signals that the kingdom is a safe bet for bond investors, while Abu Dhabi has the same rating but with a stable outlook. Qatar's rating is being held at AA1+ with a stable outlook thanks to a strong net external and fiscal asset position. Bahrain's rating was downgraded to BBB-A3 because of the country's weakening fiscal profile and its uncertain policy response, according to S&P. Dubai's foreign trade in food recorded a 14% surge in growth in the first 9 months of 2014, according to new figures released by Dubai Customs. The statistics released on the sidelines of Gulf Food showed that trade in food products from January to September 2014 reached 66 billion dirhams, compared to 58.2 billion dirhams during the same period in 2013. Imports rose from 37.6 billion dirhams to 43 billion dirhams, re-exports from 11 billion dirhams to 13 billion dirhams, and exports from 9.6 billion dirhams to 10 billion dirhams, according to a statement cited by the Emirates news agency WAM. Ahmad Abdul Salim Kazim, the Director of Strategy and Corporate Excellence at Dubai Customs, was quoted as saying that he was committed to further promoting the Emirates' status as a global hub for foodstuff trading in the region, adding that growth is being driven by a favorable business environment with exceptional logistics services, plus time and cost-saving customs procedures, and efficient quality control measures on all of Dubai's traded food commodities. The number of mergers and acquisitions in the MENA region rose 6% in 2014 to 468 deals, up from 442 deals in 2013 on the back of strong market fundamentals. According to Ernst & Young's fourth quarter MENA M&A update, the announced deal value in 2014 decreased from $50.7 billion in 2013 to $44.9 billion in 2014, a decrease of 11%. Representatives from EY were quoted as saying that the growth of MENA M&A is expected to continue in 2015 at a normalized year-on-year growth rate of up to 10%, with the majority of MENA M&A transactions tending to occur in consumption-led sectors such as food and beverage, retail, healthcare and education, which have little correlation to economic activity and changes in oil price. Fourth quarter last year ended strongly with 150 deals with a value of $16.2 billion, the highest value and number of announced deals in 2014. Compared to the same quarter in 2013, Q4 announced deals doubled in value and increased by 26% in number. The UAE had the largest number and value of inbound deals, with EY assessing that the MENA M&A market will be led mainly by the GCC, namely the UAE, Saudi Arabia and Qatar, with the revival of Egypt's M&A market in 2014 expected to continue in 2015. In the report, Ernst & Young stated that according to the statistics, the UAE dominated as the target country with the largest number and value of inbound deals in MENA, which points to the strong confidence of international investors in the UAE's potential. Freight volumes and passenger traffic at Al Maktoum International at Dubai World Central reached record levels in 2014, according to the year-end traffic report released today by operator Dubai Airports. DWC welcomed 845,046 passengers in its first full year of passenger operations, boosted mainly by the arrival of a number of passenger carriers during the runway refurbishment program at Dubai International from the 1st of May to the 20th of July. The annual figures were also augmented by traffic during the fourth quarter, during which DWC handled 110,920 passengers. Freight volumes at DWC surged 262.5% to 758,371 tons in 2014, compared to 209,209 tonnes in 2013 due to the completion of the shift of all freighter operators from Dubai International to Dubai World Central by May. The airport registered robust growth in the fourth quarter, with cargo volumes reaching 238,520 tonnes, up 278.4% compared to 63,028 tonnes recorded during the same period in 2013. The increased activity in passenger and freight operations at DWC propelled the number of annual aircraft movements by 91.6% to 47,655 compared to 24,871 during 2013. The airport recorded 11,687 aircraft movements during the fourth quarter, up 47% compared to 7,948 during the corresponding period in 2013.